years ago, an independent professional investment organization was set up to invest the Canada Pension Plan on behalf of the millions of working and retired Canadians. It had a very clear goal, which is to earn the best possible investment returns. And today, CPP Investments invests across public equities, private equities, bonds, private debts, real estate, infrastructure, and many other areas, all in order to build a resilient, globally diversified portfolio and to grow the CPP Fund to help ensure the financial security of millions of Canadians now and for generations to come.
Hello. A warm welcome to everyone in Saskatchewan joining us today. Thank you for making the time to be with us at our public meeting. My name is Heather Monroe Bloom, and I have the pleasure of serving as Chair of CPP Investments, the Canada Pension Plan Investment Board. Every 2 years, we hold public meetings with Canadians. It's our commitment to update you on how we are investing the CPP Fund to help ensure it will be there for many years to come, and to provide you with an opportunity to ask questions directly to our leadership. CPP is an important foundation for Canadians in retirement. Understanding the fund's performance and sustainability will provide information and reassurance regarding how it fits into planning for your future. This year, against the backdrop of the global pandemic, we're holding these meetings virtually. We believe this is the safest way to provide you with a full report on our work, while at the same time giving you an opportunity to ask questions. In developing today's program, we talked with numerous Canadians in advance. We wanted to determine what questions you might like us to address. Over the next 20 minutes, we will touch on many of these topics, including our approach to sustainable investing and how we design a resilient CPP fund for the long term. We will also share our most recent financial performance, and you will hear from our CEO, his perspective on the current global economic situation. Finally, we have 35 minutes set aside to answer your questions. You may submit your questions at any time during the presentation, and we will do our utmost to respond during the question period, and if not, we'll follow up with you after the broadcast. 10 years ago, I joined the board of CPP Investments, and I was honored to become chairperson in 2014. Over these years, our steadfast goal has been to provide the highest standard of governance and oversight at CPP Investments. Let me begin by saying a few words about how we do this on your behalf. In a challenging and rapidly changing environment, sound governance plays a critical role in ensuring that CPP Investments continues to meet its obligations to each of you, the 20 million Canadians who contribute to the CPP Fund, and those that rely on it as part of their financial security in retirement. CPP Investments operates at arm's length from federal and provincial governments and is guided by the independent, highly qualified professional board of directors, which I am privileged to chair. Our governance structure is designed to support a clear goal to invest the funds that come in from contributors, maximizing returns without incurring excessive risk. In addition, the assets in the CPP Fund are strictly segregated from all government funds and are thus protected from any political interference. Our board is comprised of experienced individuals with the skill sets and expertise needed to provide effective oversight of this global investment organization. The board is also diverse, with a wide range of relevant professional backgrounds and global experience. We are each committed to serving the key public purpose of the fund. We are strong believers in the value of transparency and open dialogue, and mindful of the important role entrusted to us to help ensure the CPP remains sustainable for future generations. That's why each year we publish an annual report of our financial performance, and in it, other important information which you can find on our corporate website. And every 2 years, we hold public meetings across Canada to answer questions from Canadians. Over the past 24 months, the board has continued its ongoing commitment to continually enhancing our governance. This has included approving the next phase of the organization's long-term strategic direction, a renewed focus on conduct and culture, and further strengthening of our risk management practices. Last year, the board approved a new integrated risk framework for the organization, and this year, the board created a standing risk committee that oversees this area. Our approach looks at all risks holistically, from those that stem from investment decisions to those posed by financial markets. We also keep an ongoing watch over emerging threats, such as climate change, cybersecurity, and geopolitical risks. Our ongoing crisis preparedness has positioned us to respond quickly to the COVID-19 pandemic. Through 2020, the board has worked closely with management to ensure the fund is well positioned to manage through the significant financial and operational impacts of the COVID-19 pandemic. Acknowledging these unprecedented circumstances, my fellow directors and I are confident that management is taking every appropriate step to weather these exceptional challenges to best of ability. We continue to have strong conviction in the organization's planning for the long term. Our highly constructive and collaborative relationship with management enables us to work together on the evolution of our strategy. Management understands their role in executing the strategy, and the board's role remains focused on oversight and guidance. Our 2025 business strategy, approved 2 years ago, is designed to keep us well positioned to mitigate future financial disruptions and to capitalize on new growth opportunities in the years ahead. We strive to remain a leader in realizing global governance best practices for our industry, and we actively promote strong governance practices not only in CPP Investments, but in all of the companies in which we invest. In doing so, we continue to represent the very best interests of you, our contributors and beneficiaries across Canada. On behalf of the Board of Directors and management, we're united in our commitment to the highest standards of corporate governance, and we're proud to be recognized internationally as a leader in pension plan management. I'm very pleased to report that your CPP fund is in strong, capable hands under the leadership of our CEO, Mark Machin. I would now like to turn it over to Mark to share a few words with you.
Thank you, Heather. We're living in extraordinary times. The global pandemic continues to impact people, communities, and economies. It's altered our lives and how we live. And while this is not the first disease to spread around the world, this pandemic is casting a long shadow. Health officials and governments are learning many things about COVID-19, with better treatments, testing, and the global race to develop and produce a viable vaccine well underway. Yet, there's much more we need to know. It's this uncertainty and the start-stop of reopenings that's adversely impacting confidence in global economies. And Canada is not immune. Our economists at CPP Investments project the world economy will contract by 3.4% this year, a stark reversal from the 2.8% growth anticipated at the beginning of the year. Yet we're now starting to see improvements in many parts of the world where the economies are emerging from lockdowns and are now turning back to growth. In Canada, as businesses and retail have started to reopen, recovery has begun. However, it will likely be slow and extend well into 2021. All of you across Canada, from coast to coast to coast, have been deeply impacted. But there's one thing you don't need to worry about, and that's the financial security of the CPP fund. We invest the CPP fund to weather all types of storms. And while a global pandemic of this magnitude is rare, the likelihood of a big event affecting financial markets is more frequent. We not only anticipate, we prepare for moments like this. Over the past decade, we've enhanced our risk management practices and properly prepared a financial crisis plan, business continuity practices, and even a pandemic response plan. So when the pandemic hit, we quickly moved from 9 offices globally to more than 1,800 home offices, continuing to invest the CPP fund with the same skill, professionalism, and good judgment to help protect your retirement security. The strength of our long-term investing approach is a well-diversified portfolio that helps to ensure the fund is resilient. We invest across the globe in a wide range of industries and asset classes to ensure the investments are diversified and not dependent on just one area. And this minimizes the risk to the fund and helps us to earn the best possible returns over the long term. Right now, the global pandemic is actually accelerating growth in healthcare, technology, data infrastructure, and renewable energy, and that's where we're making investments, amongst many other diverse sectors. We're also looking closely at emerging opportunities created by the new habits likely to shape our post-COVID world. Opportunities such as the rise of e-commerce and online grocery, the adoption of telehealth, the increase in remote work, the creation of new complex supply chains, and the shift in population away from urban centers. We expect some of these to be long-lasting and will create significant investment opportunities for the future. Over the next 12 to 18 months, we expect the global economy will bounce back, albeit slowly. But whatever happens, you can continue to trust the CPP will be there for you for many years to come. Here's a short report on our performance.
At CPP Investments, we never lose sight of our long-term objectives in our daily work. Maximize investment returns for the CPP fund and minimize risk to help provide financial security for generations of Canadians. The fund grew to $434.4 billion as of June 30th, 2020, a $33.8 billion increase over the past 12 months. Our active management strategy and the strength of the diversified investment portfolio we've built over the years allowed us to weather the storm as the world faced extreme challenges this year. We can't always predict the future, yet we do plan for it. Our sophisticated investors take a disciplined long-term approach to diversify the fund across geographies and asset classes, maximizing our returns over a long horizon against a wide range of possible events. That's why the true test of our performance is our long-term results. In the last 10 years, we earned 10.7% net nominal return, or $259.8 billion in net income after all costs. Investing today with an eye to the future, we're building a portfolio designed to grow and generate returns over time. This year, we continue to make significant investments in innovative healthcare and advanced technologies, infrastructure, autonomous vehicles, and renewable energy, all critical in the years to come. Now, as we look ahead to a period of uncertainty, we will stay on course with our long-term investing strategy, prudently manage our capital, and closely manage our existing portfolio of investments. We'll continue to stress test our portfolio as we always do, looking at optimal diversification and strong investment returns under a variety of future scenarios. This way, we can be confident that the fund will continue to deliver decades of steady performance. It's why the latest report from the Chief Actuary of Canada confirmed that the fund remains sustainable for at least 75 years. While our daily lives may have changed, the sustainability of the CPP fund has not. Our sound long-term strategy is essential now more than ever. We'll continue to invest and grow the fund for millions and millions of Canadians as a critical part of their financial security today and for many years ahead. At CPP Investments, we believe sustainable investing is simply smart long-term investing. We have a clear goal to maximize return without undue risk of loss. Effectively managing environmental, social, and governance factors creates sustainable value over the long term.
10 years ago, we set up a group to look at environmental, social, and governance risks. And that group has grown from 2 people to 15 people today that look at investments across the organization to assess these risks.
We recently updated our policy on sustainable investments to more clearly articulate the business case for doing this and our expectations of corporates with respect to how they integrate ESG considerations into their strategy and operations.
When it comes to actively engaging with companies, we focus on 5 key areas. Water, one of the world's most critical resources. Human rights, because companies that don't respect human rights face potential operational turmoil, higher legal risks, lack of community support, and damage to their reputation. Executive compensation. We see clear evidence of long-term shareholder value when there is alignment between executive pay and company performance. Board effectiveness. Having a diverse board in place to guide strategy and oversee risks is critical to achieving superior financial performance. we have a global board gender voting practice to take a stand for increased representation of women on corporate boards around the world. In 2020, CPP Investments voted against the election of directors at 323 international companies for not having any women on their boards. And finally, climate change, one of the most significant global challenges of our time.
Climate change is one of the big issues of our generation, and as long-term investors, we need to think about both the risks and opportunities that climate change present. Climate change creates investment opportunities as well. For example, in renewable energy, where we've made investments in wind energy, in solar energy, and another one would be electric vehicle charging stations. We think that's going to be an important piece of infrastructure in the future where there are more and more electric vehicles on the road.
Over the last year, all major transactions have incorporated climate change due diligence. We've reviewed over 100 transactions worth more than $100 billion. We aim to deliver the investment teams and their investment committees clear line of sight of both the climate risks and opportunities associated with the investment, but also approaches to managing those risks or capturing those opportunities where we proceed with the investment.
One thing that we're really excited about is something that's happening here in Canada, which is an investment that we've made into carbon capture technology that we think could be really important in the future.
Meeting the needs of almost 8 billion people on the planet today is already creating tipping points with respect to water stress, pollution, income inequality, and many more factors. Consumers' expectations are quickly changing in response to this, and the number of companies that have failed to realize this and destroyed considerable shareholder value continues to grow. To be a successful investor in this new century, we have to be able to identify the companies proactively managing this reality, but also those failing to capture the risks and opportunities of this new century.
In some ways, the pandemic has pulled forward the future in terms of change. So now we have an opportunity to invest in things like climate change, where we can put our money to work in things that will help us have a more prosperous, sustainable, and healthy environment.
I don't think that many of us have really thought long-term about how we're going to save up for retirement. And when we do think about it, it's usually that retirement is a long way out.
Young people are concerned about buying their first home and settling into their careers. Retirement isn't on their radar. Many people don't have access to company pension plans that may have been available for previous generations. And on top of that, many people are struggling to save for retirement. Having the enhancements to the CPP is critically important to their financial security in retirement.
The increased benefits are really important for Canadians in the long term. It's going to provide a stronger and more stable income for today's generation and for future beneficiaries.
I want all young Canadians to know that the CPP will be there for them when they retire. It's a foundation for their retirement that they can count on.
A lot of our investments globally are very long-term. We really make the best investments through our intensive research deep dives into specific industries or sectors. I think it's great that we have a separate organization that actually manages the money on behalf of Canadians, that's sustainable for the long term, and it will be there for people when they retire.
Whether you're starting in your career or you're nearing retirement, it's important to the social fabric of our country. I get to see firsthand the bright, talented minds that work at CPP Investments. It's inspiring to see how many people are dedicating their lives to growing the fund and working towards a very important public purpose.
At CPP Investments, we design a portfolio to help ensure the CPP is strong, resilient, and sustainable for the long term. Our team of professional investors invests around the world in public and private assets like stocks, bonds, real estate, and infrastructure. Together, this delivers a well-balanced, globally diversified portfolio that will help achieve higher returns over a very long horizon and materially above what can be achieved through a low-cost passive investment strategy.
In designing a portfolio, the first step is looking at the risk. What is the appropriate risk target? Because we have to take some amount of risk in order to earn returns. We consider market losses or short-term volatility, reputational risk, and the ability to sustain a long-term strategy.
We have to balance short-term risk with longer-term returns. If we took an insufficient amount of risk, we would not be able to sustain the plan in the longer term. But on the other hand, if we took too much risk, there'd be more volatility in the near term and downside risk for beneficiaries and recipients. So we try to balance those two things together to get the best outcomes for contributors and beneficiaries in the near term and in the long term.
The total portfolio approach means that we look beyond the asset class labels and try to identify what are the risk-return factors that drive returns for different investments.
Principally, these are economic drivers, things like GDP growth, the business cycle, interest rates, inflation, the way in which those broad economic factors affect asset returns. And we try to design a portfolio that's quite balanced across all those various economic factors. The reason for that is that they often behave in quite different ways. So by having a balanced set of exposures, we get a more resilient portfolio that's better diversified and more able to deliver on our mandate.
Diversification is the most powerful way to mitigate market downturns and enhance investment returns. It helps to build a resilient portfolio.
And the way diversification works is effectively it means that you are investing in assets, in sectors, in companies that don't move together all at the same time. One asset may be doing well and another asset is not doing so well, and there's kind of a natural offset or a bit of insurance or hedge that comes from diversification. You could think of it as essentially meaning that we're not putting all our eggs in one basket. We're putting our eggs in a lot of different baskets. If a given country is doing poorly and you can't be sure in advance whether that will happen, you've also invested in another country that's doing well. The same thing would be true with particular companies. And this enables us to have a more resilient portfolio.
To determine how resilient our portfolio is, we perform stress tests to see how it will react under various scenarios. And then, COVID hit.
Market crisis due to COVID-19 in March was unprecedented. However, in a crisis like that, you just really discover whether the diversification is working, and the diversification in our portfolio worked as intended. So our losses in the portfolio were limited because they're offset by the outperformance or the gains from government bonds and the depreciation of the Canadian dollar. And it worked exactly as we expected.
We manage the fund in a way that's responsible, disciplined, and consistent with our mandate so that there's sustained value added over the long term. CPP Investments also has in place robust valuation processes to measure the fair values of our investments on an ongoing basis. With a well-balanced and globally diversified portfolio, Canadians can trust that the CPP will be there for you today and for generations to come.
On behalf of the more than 1,800 CPP investment professionals around the world and our board of directors, thank you for taking the time to be with us today. We hope we've given you a better understanding of what we do and of our commitment to you, the more than 20 million CPP contributors and beneficiaries. We would now like to move to the question and answer session of our meeting.
Hello, and welcome to all CPP contributors and beneficiaries in Saskatchewan. As Heather just mentioned, we're now moving to this final segment of the meeting, the question and answer period. Before kicking it off, I would like to note that we are currently meeting virtually throughout all of Saskatchewan and would therefore like to acknowledge the lands and traditional territories of the Indigenous peoples of Saskatchewan. My name is Tara Perkins. I'm Managing Director of External Affairs at CPPIB, and we're happy to host these meetings to provide you, the CPP contributors and beneficiaries, with the opportunity to ask questions about our organization and the role that it plays in helping ensure the fund's sustainability. I'll be moderating the session today, and I'm here with Mary Sullivan, our Senior Managing Director and Chief Talent Officer, who will be answering your questions.
Thanks very much, Tara, and thank you to all of you in Saskatchewan for participating today. As Tara mentioned, I'm Mary Sullivan, the Chief Talent Officer at CPP Investments. That means that I get to oversee the recruitment, retention, development, and engagement of my 1,800 plus talented colleagues around the world. I'm excited today to take on some of your important questions and to provide some key insights into the activities of CPP Investments.
And we definitely encourage your questions today. So if you have one, please look at the bottom left of your screen. There's a blue Ask button there where you can submit them to us, and we will be looking for those throughout the remainder of this meeting. And thank you to those of you who submitted questions in advance. We want to ensure we have time for the live ones. If we have more questions than we can answer during the remainder of this session, we will keep yours on file and review it, and in keeping with our protocols, we'll endeavor to get back to you by email in due course. So with that, Mary, should we start off with our first question?
Sure.
And they're asking what active management entails.
Sure. Thanks very much for the question. It's a good one. Maybe I will start with a little primer on active versus passive management. When CPP Investments was created in 1997, we were a completely passive investment management organization. We invested in Canadian bonds only. And in 2006, with our board of directors, we made the strategic decision to change strategy slightly and actively manage the fund to a much greater degree, with using a reference portfolio, as a performance benchmark. So, with the ability to be able to always measure our performance against what would otherwise have been a passive management strategy. As you have seen, the combined value of the fund as at March 31st of 2020 is $409.6 billion. Importantly, that's $52.6 billion higher than where the fund would have been had we taken those funds and continued to and all the subsequent cash flows that we receive, and continue to simply invest it in a passive portfolio. We recognize that active management is, lots of investors seek above market returns, and it's very tough to achieve. And that active management is not a low-cost approach. It both increases the complexity of the work that we do and requires a lot of resources, particularly human resources, to deal with the risk and return assessment that we do on your behalf. But we firmly believe that it's paying off, and we can use the comparative advantages of the fund, including the size of the fund, in a prudent and responsible way, and that's consistent with our statutory objectives. We're confident that it will continue to generate above average value add in the long term.
Great. So our second question, where is energy going to come from in the future if not oil and gas? And how are you investing with that in mind?
Sure. We have, over the course of the last couple of years, created a specific sleeve of investment group, Power and Renewables, to invest in green energy, whether that be wind, solar, electric, as you heard earlier today. And we invest across the entire spectrum of energy. We do have oil and gas investments still, and we'll continue to engage with our investee companies to support the energy transition. Like all of you, we know that climate change is one of the biggest issues on all of our minds, whether that be if you're a CPP employee, if you are working in the oil sands in Alberta, if you're a passionate advocate on behalf of climate change. And so helping organizations measure the risks and opportunity of climate change is one of the things that we take very seriously. I'll give you a couple of examples of recent investments that we have made at the green end of the energy spectrum. We have a partnership with Enbridge, which for wind farms, and in January of this year we acquired Pattern Energy, which has a portfolio of 28 different renewable energy projects. The total investment there is $6.6 billion, which really reflects the confidence we have in the role that green energy will be playing in meeting global demand in the future.
Great. We're getting some good questions, so thank you for those, and please keep them coming. And we'll go now to a video question. We received this for our CEO, Mark Machin, and we can look at that now.
Hello, my name is Joshua Kirkshin, and I'm the Director of Research and Policy Development here at the Saskatchewan Chamber of Commerce. Our question submission for the Canada Pension Plan Investment Board 2020 public consultation process is as follows. The Canada Pension Plan Investment Board has invested in Saskatchewan farmland. As an organization, we fully supported those efforts. The question for you is, what can we do as a business community to secure greater investment by the Canada Pension Plan Investment Board into Saskatchewan to help support our growth and broaden your portfolio? Thank you.
It's a really good question. So as I mentioned, we put this to our CEO, Mark Machin, and here's his response.
Thank you for the question. It's worth noting, I think, that we have over $1.4 billion invested in Saskatchewan today. And we invest there because we saw compelling investment opportunities. If an investment can produce an attractive risk-adjusted return and it fits within our strategy, we will always consider it. And I'd say whatever you can do to encourage the creation and development of these opportunities, that will encourage investors like ourselves and others to look at investments in Saskatchewan. And that could mean maintaining an attractive, stable investment environment, attractive and stable tax environment, and an attractive and stable regulatory environment. And that's what institutional investors like us really depend on.
Okay. So Mary, our next question comes from a woman who says, in the video earlier, it was mentioned that the fund has 75 years of sustainability. How does this compare to previous years, the 10-year trend in the past? Is there a long-term goal?
That is a fantastic question and a good time to talk about the Office of the Chief Actuary. So the Office of the Chief Actuary independently measures the sustainability of the Canada Pension Plan every 2 years, and and reports on a 75-year time horizon. So we are always measured against this 75-year time horizon, but things are taken into consideration that both are within the fund's control and things outside of the fund's control, like employment in Canada, immigration in Canada, mortality rates, for instance, that would impact the ability to be able to pay pensions. In fact, for the entirety of the existence of Canada, the CPPIB, we have always met that 75-year time horizon. There was a time when, in 1995, the chief actuary determined that the fund would not meet that 75-year time frame, and of course we want to invest for generations and make sure it's around for generations. So the federal and provincial governments got together at that point in time and did two things. One, they did increase CPP contribution rates in order to ensure sustainability in the future, and the second was that they created the CPP Investment Board.
Great. So we have a gentleman asking, how is the turmoil in the USA affecting the investment strategy for CPP?
We watch with great interest what is going on in the United States. The U.S. is our biggest trading partner as Canadians, but also our biggest market at CPP. There are about a third of the fund is invested in the U.S., and I would say that we watch particularly those geopolitical issues related to trade very, very carefully to see what the impact would be on global trade, for instance. But we don't look at the U.S. any differently than we do any of our other markets, but other than the fact that it's large and therefore important. But we're looking at factors, risk factors across our portfolio for matters related to geopolitical risk, legal risk, climate risk, etc. So I wouldn't say that there's anything in particular in the United States that's going on right now, or because we're a long-term investor, we don't believe that short-term events like an election are going to broadly impact how our portfolio performs over time.
And another gentleman asking, what is the rate of return for the last 3 months, 6 months, year, and 5 years as compared to the 10-year average? So maybe I'll just let him know on the left-hand side of your screen, there should be a tab that says references. And in the reference tab, if you haven't seen it already, you'll find the link to our annual report, where certainly all of those numbers are available. But I don't know if, Mary, if you want to touch on the last quarter and 5 years and 10 years a bit?
Sure, I will definitely do that. The last, and maybe the last couple of quarters, we haven't released our September 30th numbers yet, but I can talk to you about June 30th and our end of year, March 31st, 2020. So in the quarter ending June 30th, the fund increased in value by 5.6%, and at the quarter ending March 31st, you know that the annual returns were 3.1%, but the fund lost 3.7% between January and March. That compares to a global figure of 11.7% loss over a broad range of portfolios, and I think proves the point of that resiliency and the eggs in many baskets strategy that we have, where we aren't going to be impacted by one thing only. We have a mix of private and public assets. We have debt as a component of our portfolio, and that allows us to weather the storms a little bit more solidly. We certainly didn't go down as much as the market did, nor did we go up as much as the market did in the last quarter. But collectively, we continue to show that strong, steady growth.
Great. So we have a gentleman asking about our investments in Western Canada, which I know are a significant proportion of our Canadian holdings.
For sure, quite significant. Mark mentioned on the video earlier that we have about $1.4 billion invested in Saskatchewan. Specifically, numbers a little bit higher in Alberta. It's about 13% of our entire Canadian portfolio is invested in Alberta. And I don't think I have the BC numbers off the top of my head, but you might know them, Tara.
I can't recall it right now, but we'll get that number and follow up. So our next question is, how much does CPP have invested in private equity, and what's the target return for this asset class?
Again, I'm going to rely on you for that. The specific number, yes. That is about 24% of the portfolio.
It is, and I will point to the annual report. So if you go towards the front of the annual report, you'll find the pie chart with our asset classes there, and we're happy to provide you with more details after the fact. What risks and opportunities, Mary, do we see in China?
Sure. We have often are asked about our investments in China and what we think about them, and particularly given some of the tensions between Canada and China of late, is it appropriate that we be investing in China? And we believe that the answer to that is absolutely. And in fact, not investing in China would be a considerable risk for the organization. And I'll give you a few reasons why. Number one, China is a huge economy, and soon will be the number one economy in the world. It's 1/5 of the world's population. So failing to invest in a market of that size and expose the fund to consumers in that country, we believe is not reasonable. Secondly, China tends to have returns that are uncorrelated. In other words, they move in the opposite direction to other economies, and so gives us some of that cushion or hedge that we were talking about in terms of portfolio construction. An example of that is that although the fund in totality made 3.1% last year, the returns in China specifically were 9.8%, so quite a bit higher. Third, there's great innovation in China and great organizations that we believe that we can participate with and bring those ideas into other portfolio companies that we have around the world. And I might just add a fourth reason, really, and that is that at moments in time there can be a little bit of friction in between Canada and others, or in the world. We tend not to look at moments in time, but years in the way that we think about the portfolio. So looking forward to 2040, which is really sort of the period that we'd consider to be a typical quarter within anyone else's time frame. We want to be in China because of what we think China will represent at that point in time, and being there now allows us to be in early, establish the partnerships that are the best, so that we get the calls for those best investments and can partner with the very best in the region.
Great. So we have a gentleman asking about contingencies for the CPP if Alberta attempts to pull out of the CPP and replace it with a provincial plan.
Yeah, that's a great question. Again, one we receive quite a lot. You will have read and heard much about the potential that the Alberta pension plan there would be an establishment of a Alberta pension plan separate and apart from the rest of Canada. And we respect Alberta's right to do that. Indeed, any province could do that. Quebec has already made that decision well before the CPP was created. And so we respect that. We've had lots of opportunity and continue to have discussions with the Fair Deal panel and with politicians in Alberta about what the outcome of that might be. It's quite complicated to think about what might happen if it was to disentangle, quite frankly. And so all of the details of how that might work have yet to be determined, and even if there will be an Alberta pension plan, of course, has yet to be determined. What we're focused on, frankly, is investing for the best, for the benefit of our contributors and beneficiaries, whomever those contributors and beneficiaries may be. We've been doing that for 5.8 million Albertans for many, many years, and we'll continue to do so in the best manner we possibly can, as we will with all other of our constituents.
Great. So we have someone asking about the farmland that we own in Saskatchewan and what our plans are for it.
So we purchased farmland in Saskatchewan some time ago as part of an agriculture strategy, which we have since closed down. Not the investment, but the agriculture strategy. And the reason for that is a couple of fold. One, it's difficult with a fund of this size to take small investments and scale them quickly. So we think that there's lots of attractive investments in the market that frankly are probably a bit too small for us, given the overall size of the fund and the ability to be able to continue to scale them. But we do own farmland in Saskatchewan. We've owned it for some time. We have no intention of divesting of that farmland. Institutional investors are no longer able to invest in Saskatchewan farmland as a political decision that the government has taken, and again, we respect. But of that we own, we expect to continue to own it for some time.
Great. And a gentleman asking, how much do you consider a regional balance across Canada to ensure the CPP investment strategy looks at the strengths of various regions? Kind of speaks to our mandate.
Yeah, it does. It does speak to our mandate. Our mandate is to invest the assets, and it's set out very, very clearly for us in the CPPIB Act, and that is that we invest the assets of the CPP fund in order to maximize returns for our beneficiaries and contributors without undue risk of loss. And so it's a pure investment only mandate. And so we get lots of questions about why we don't invest purposeful investing or spread money across Canada, etc. Our focus is on best risk-adjusted returns, and that's how we think we can do best for Canada and for Canadians. So rather than taking a look at spreading things like peanut butter, we look for the best opportunities within Canada and frankly around the world under that strategy of diversification that will deliver the best risk-adjusted returns in the long run.
And you touched on this, Mary, but a gentleman is asking, so maybe you can reiterate. He's asking if we lost money during COVID-19 since the pandemic started.
We have not lost money during COVID-19. Certainly some of our portfolio companies have done better than others, as you can imagine, in a broadly diverse portfolio like we have, subject to such a shock that the impact on the public markets in particular experienced. So at a point in time, certainly lots of our public market investments would have been down considerably. As you know, the public markets have rebounded quite nicely since March, and so we have enjoyed that as well. And then in our portfolio companies, some of them are experiencing much more rapid growth than we would have expected. Logistics organizations, we've invested in our real estate portfolio in a lot of distribution centers. Those, as you can imagine, if as many boxes are arriving at your door as they are at mine, that those organizations are doing exceedingly well at this point in time. And others, quite frankly, are very, very troubled. Retail investments, it's probably too early to call, much too early to call commercial real estate, for office. So far it's holding its own, and a bit too early to call where it will go. So overall, the overall portfolio, as I said, from March to the end of June grew by 5.6%, so we were pleased with that. And while there was a small contraction from January to March, the year was favorable.
Great. So someone is asking, so many pensions are having difficulty these days. How can I trust that the CPP will be there for me when I retire?
Sure, and I'll just again point you. Hopefully, you believe everything that I'm saying. But I'll point you to an external source, which is the Office of the Chief Actuary, which really is working purely on your behalf, to be able to understand just how long the CPP fund will be able to survive, given a number of different factors: immigration, mortality, wage, employment, and the performance of CPP Investments. And in his most recent review, which was at the end of 2018, he once again affirmed that the CPP fund is safe for the next 75 years. So we can be confident that our children and our children's children will be in good shape relative to the CPP fund.
Great. And someone is asking whether our employees are going to the office during the pandemic.
For the most part, no. This might be a good time to talk to you about our it was referenced in the videos earlier, but our preparedness plan specifically around any kind of crisis management. So we have a financial crisis management team, a plan, a pandemic plan, etc. And we in January started working on our pandemic plan because our office in Hong Kong was at that point in time experiencing the virus long before it even arrived in Europe, and certainly long before it arrived in North America. So we enacted the plan in January to start to prepare for how we would support employees in our Hong Kong office. And they began working from home in January. And then we took our learnings from that and really were able to take it through the entire organization as each of the jurisdictions in which we conduct business and have offices started to suffer during the pandemic. So for the most part, we have closed offices. Hong Kong is now reopened. Hong Kong has done very well with the management of the virus. They have very, very tight controls. It helps that it's an island, so the number of people coming in and leaving can be more carefully controlled than a great big country like Canada. Although we're doing a great job, pretty good job too. And so Hong Kong is now back. We are starting to open our offices for access. We understand that some of our employees are interested in having access to our offices simply as an alternative place to work. They're getting tired of being in their dining rooms or spare bedrooms or living and working in a pretty small space. And so Some of our offices have reopened. Our Canadian offices have not yet. We're hoping to do so in the next couple of months.
Okay, great. And just to circle...
And we're here, but this is the first time I've seen you since March.
It is, and it's great to see you. Just to circle back on the holdings in British Columbia, I looked up, so it's 9.4% of our Canadian holdings are in British Columbia for the questioner on that. So the next question is how we factor climate change into our investment decision making.
Sure. So we know that there will be an energy transition, and so for every single investment that we look into, we engage with the management. Certainly for private investments, engage with the management and understand, encourage them to certainly disclose in their financial disclosure all of their climate-related risks. And part of the decision about making an investment is how carefully they have considered the impact of climate, both as an opportunity but also as a risk for their existing businesses, and how they have incorporated that into their strategic plans. And so it's always a factor, as are human rights, as our board governance, as our executive compensation, as is matters specifically around water that will go into our due diligence, along with typical due diligence factors such as what we think the financial performance of a specific sector will be, what the demand for product will be, how the investment will perform over time.
Great. So our next question is what role governments play in determining where our funds are invested?
Governments play no role in determining where funds are invested. We are very, very privileged to be entrusted with the ability to be able to make those decisions independently. And CPPIB is admired globally, I think, for a number of reasons, but probably the number one is that we have a gold governance standard, and the federal and provincial governments, when they decided to create CPP, purposefully said this needs to be separate and apart. The organization, in order to fulfill its mandate to invest the assets to maximize return without undue risk of loss, we can't be engaged in that dialogue. We can't be saying, gee, you should be buying this bridge in PEI. We can't be saying that we don't want you to be investing here, et cetera, because that interference will not allow the mandate to be exacted. So the funds are segregated. What is not needed to pay pensions comes to us, and we are governed by an independent, very highly qualified board of directors who, again, while ultimately they are appointed by the government, they're selected by the existing board of directors, and they come with very, very diverse background, excellent business credentials, lots of them investors in their own right, and so we have that. And then the government really, of course, we are accountable to the federal finance ministers, to all the finance ministers of the participating provinces, and most importantly, to you.
And we're down to our final few minutes, I see, so I think this might be our last question. A gentleman is asking, and it's a difficult one.
Oh, no.
It used to be that technology would double in, say, 7 to 10 years. How long does it take for technology to double now?
Oh, well, if you believe Moore's law, it's accelerating. It's definitely accelerating. I don't know that I'm the perfect person to be able to give you the mathematical formula of that, but I can certainly introduce you to many of my colleagues who will be able to. But technology is accelerating at a very, very rapid rate. In fact, it's the reason why we decided to open up our 9th office. We're very prudent about the money that we spend on your behalf. We opened up our 9th office this past year in San Francisco to allow us to be closer to the technology ecosystem that would inform our investments across the world, because understanding what's happening with and being in that market and seeing what all of the venture firms are developing in terms of new technologies really helps us to understand better what we think the impact and the development of technology will be over time.
And internally, not so long ago, we added a Chief Technology and Development and Data Officer.
That is correct. That is correct. Absolutely.
That's great. I think we're out of time for further questions. Mary, thank you so much for doing this.
Thank you for doing it. Thank you. Thanks to all of you for your questions. We really appreciate your participation and your engagement today. And we hope that this conversation helped you better understand CPP Investments and what we're doing in terms of ensuring the fund's sustainability in the long run. You will see, probably right now, coming up on your screen, a short survey. We'd like to really understand how to improve in the future, or any feedback that you have for us, or additional questions that we can answer that perhaps my responses triggered in you as you went on. I'd like to just say, on behalf of the board, the management of CPP Investments, and all my fellow employees, I want to thank you for participating. It's important for us to be able to have the opportunity to engage with you, and it's great that you spend the time doing so with us. I hope you have a very happy Thanksgiving this coming weekend, and stay safe and be well.